Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A fifth bullish white soldier yesterday, and a continuing move up and away from the upper trend line, currently at 117.71 of the descending wedge pattern. We're now approaching target X on the upside, and that target X is the potential target for the descending wedge pattern. It is in the 119.30 area. The only issue yesterday was a cap on the rise by the two lesser Fibonacci levels of 118.87 and 118.97. Beyond target X, we have the continuation lower diamond trend line from the December 2019 to May 2020 diamond pattern. However, I suspect that may not be that strong a resistance, and we may well have to rely on the 119.75 area, which contains the 50% Fibonacci line of the November 2020 to January 2021 move, the flatlining medium moving average currently at 119.74, and the approaching and declining short medium moving average currently 119.82. So far today, prices have tried higher once more and again become bogged down by the two lesser Fibonacci levels at 118.87 and 118.97. But it seems the market is working its way through it. Cable, aka sterling against the US dollar. A fourth bullish white soldier yesterday, and a move up over both the flatlining medium moving average, currently 139.22, and a more potent looking short medium moving average, currently 139.62. However, whilst prices closed over the medium moving average, they did not manage to close over the short medium moving average, which is now the obstacle overhead. This move higher now echoes my words of last week on how the try lower seen during last week was the first challenge to the long moving average since September 2020, and also that challenge back in September last year was unsuccessful, like this one. Above the short medium moving average, we now have resistance at 139.99, 140.75 and 141.43. Now so far today, prices have initially dipped lower, but not as far as the medium moving average. We've then turned around and we're now pushing higher again, trying to get back up over the stronger short medium moving average. Euro sterling. A hammer pattern yesterday, usually seen as bullish. This coming after an indecisive spinning top in the previous session, and with which it matched the low and just about the high as well. An odd sort of pattern really, as if the market wasn't paying any attention to what was going on. Overall, the market is still back within the May to date based bear channel, currently 84.69 to 85.58, and is currently cautious about testing lower. I suspect that this may be to do with the 84.70 low seen back in April. Overhead, we still have the strong resistance from the medium moving average, currently at 85.98, and the short medium moving average, currently 85.80. Okay, so today's the day. We are on the last day of the last week of July, and we're already set for a possible monthly key reversal. If we close tonight either over 8600 or under 85.70, then we'd be on. Anything in between and we'll have a lesser outside month. As a close of business yesterday, we were still looking at a monthly key reversal down. Now, so far today, a slightly lower open, but then nothing. We've expanded the range a little, especially to the high of the last couple of days in the 85.23 area, but we've not gone anywhere. We are still now looking at a monthly key reversal tonight, but plenty can happen before then. I never said this was going to be easy. US dollar against the Indian rupee. A lower bearish black crow yesterday with a new low for July. This seems a suitable follow-on to the previous session's traditionally led bearish hanging man pattern. The market managed to negotiate its way lower below the 50% Fibonacci line of February to April 2020 move at 74.26, but not attempting late June congestion between 74.10 and 74.20. We closed barely below the 50% Fibonacci line. Overhead and some distance now is the resistance from the short moving average, currently at 74.52, and the rising lower trend, currently 74.61, of the recent ascending broadening wedge pattern. All this is in the shadow of the recent combined immediate countering key reversal up and bullish engulfing pattern plus bullish opening white Mariposa. Yet with all that bullishness, it still didn't seem enough. Why do I say this? Well, a bigger shadow had been cast by the previous week's weekly key reversal down and the move late last week below the recent ascending broadening wedge pattern, which is currently 84.61 up to 74.61 up to 76.06. That was formed over June to July. All the bullish reactions recently to try and push back up within the wedge pattern didn't seem good enough. Therefore, initial downside target for the ascending broadening wedge pattern would be in the 74.05 area, whilst a further secondary target X1 would be in the 73.80 area. Now, so far today, an ever so slightly higher open and the market reverted back up over the 74.26 50% Fibonacci line. Well, it's still showing quite resolute support, that 50% Fibonacci line at 74.26, despite it being breached. It is still fighting back. The market has now just exceeded yesterday's range and was initially looking like a bullish double pattern. Still does a bit, but it's approaching some minor resistance, a Fibonacci resistance at 74.46. But the next real resistance on the top side will be that curving lower short moving average. The US dollar against the Brazilian real. A fourth bearish black crow yesterday, this time a bearish opening black Mariposa. However, it also has hints of a possible hammer pattern as well. Nevertheless, this was a continued utilization of the overhead breach, but still potent, descending upper time, currently 5:16:30 of the late May to early July bearish Andrews pitchfork. This pitchfork has been testing me by looking like it would not last another day each day in succession for now over a week, yet it is still there. Prices opened below the descending support of the short medium moving average, currently at 513.06, which had halted previous attempts lower, and dropped down through the lesser Fibonacci level at Fibonacci levels at 510.87 and 505.73, halting just below the latter and then reverting back up to closing between the two Fibonacci levels. Overall, the argument for the late June to date action being a possible double top instead of a bullish halfway hesitation are growing each day, but it's still early yet for either pattern. This all is in the shadow of the remarkable number of dead crosses we've seen here since late May. Everything now depends on whether the bearish Andrews pitchfork will continue to reassert its hold. Further below the lesser Fibonacci levels, we have the big 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. US dollar against the Mexican peso. A seventh bearish black crow yesterday and a second consecutive close below the flatlining short medium moving average, currently at 1996.94, and its recent partner, the short moving average, currently 1996.80. Prices dropped down through the influential, gently declining neckline of the February to March head and shoulders top, currently at 1984.56, eventually halting and also closing just below it. Recent action has all seemingly part of a plan to draw prices towards this neckline, as it has been since April, bar one aberration, an attractor for this market. Overall, nothing has really taken us away from the extensive indecision we've seen previously in the market, indecision that stretches from the fall back to these levels originally seen in mid-April, but which recently started again in late June. We're also currently within the April to May based congestion zone between 1985 to 1995, with the neckline lower still, currently 1959.25 of the late January to mid-May head and shoulders top, acting as further support. Plus there's a support band in between at 1971.68. So far today, no real further attempt lower. Prices opened, rose up a bit, well within yesterday's range, and have stayed there. Just above really the neckline of that February to March head and shoulders top. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors Services International Limited. And here comes the final bit.